Eddie Ghabour joins us now. Look at the futures there. Not much change at the opening bell. We're approaching it now. Eddie Ghabour is with us now. Eddie, most of our viewers, I would say, are buy and hold type investors. They're not traders. They're not in today and out tomorrow. They're buy and hold it for a while. What's wrong with that?
Well, look, I firmly believe, I've been doing this for over 20 years, and the dynamics of this market has changed so much, everything from volume to volatility, the amount of investment options to the algorithmic trading. Not to mention, we're heading into an economic cycle that no one alive has ever seen before with the amount of debt. So I firmly believe that a portion of everyone's portfolio should be in an actively managed strategy, taking advantage of market swings. This isn't day trading. This is shifting with economic cycle shift. Other than that, you can't risk manage if you just buy and hold. Stuart, if I was managing your money and every time we talked, we said buy and hold, what's the use of even paying me? So, for example, we came into this year overweight energy stocks in the oil sector, small caps and high beta, ETFs that had airlines, hotels, casinos. By June, we had taken our small cap stock down. We took high beta from 12% to 0%. And by July, we were down from 13% to 4% in small caps and got out of China in May and went into Europe. Those trades really worked well as we were decelerating into the third quarter. Now in the fourth quarter, we're back to 11% small caps. We have more exposure to cyclicals because we felt GDP was going to accelerate. Now, when we go into the first quarter next year and we start to decelerate, you don't want to be in those higher beta plays. So if you're not tactically managing risk, when you have a drawdown in the market, you're going to get whipsawed, and it can be extremely ugly.
So that what you're predicting is more gains this year, like everybody else, and then come down a bit next year. So buying now and holding into next year doesn't work. That's what I'm reading into what you're saying.
That's exactly right. I mean, you have to take advantage of what the economic signals are telling you. And going into this fourth quarter, we were going to see an acceleration. But as we go into the first quarter, I mean, GDP is going to decelerate whether we like it or not. And the Fed is in a really tough position because they've delayed tapering.
Yeah.
And now they're going to have to taper while the economy is slowing down next year.
Let me throw my theory at you. Do you think that Jay Powell will keep on printing money because he wants to keep his job and he's up for reappointment by the president?
I think they're going to be very dovish today, and they're not going to make any major statements to try to shock the market. We are not going to see that until next year. Look, unfortunately, a policy error is what's going to bring this market down, in my opinion. And the longer they wait, the hotter inflation gets, and that means they're going to have to accelerate their tightening next year because they haven't done anything to do it this year when the market could have handled it.
Got it. Eddie Ghabour, we will see you again real soon.